when most people use moving averages, they usually use maybe 1 or 2 moving averages and they trade based on the crossover. Now, that's completely a waste of time. Your entries will be too late when you trade that, because the crossover is basically so lagging, so you will most often buy at the top and you will sell at the bottom. So completely opposite of what you want to do. Now, when you look at moving averages, they can be really good at first giving you a quick direction of the trend. So if it's sloping down and price is most of the time below it, that's an indication that the trend is down on that time frame. The second thing you can use it for is basically look at where's price compared to the moving average. Is it far away? Well, you probably don't want to sell lower when you're far away from the moving average, because you're already stretched away from it. You can see it like a rubber band. Price often come back to the moving average. You see, we expand from the moving average, consolidate back to it, expand from it, and move back to it, and now we might starting to expand again. And the third thing you want to know about moving averages is basically they often act as good support and resistance. So when we're trending below it and we come up to the moving average, it often acts as a good resistance point. Same thing, if we look on the 1 hour chart here, we can see that when we come down to a sloping upwards moving average is often act as good support. And we want to focus on trading buy signals, for example 10x signals, right at these levels. Now we're coming down to the moving average again in a high time frame uptrend. So now is a good time to look for buy signals. The thing I really like about this chart as well, if we draw a Fibonacci, we can see that the 50% is in confluence with the moving average right here. So, and like I said, we're expanded from the moving average as well. So waiting for a 10x buy signal here is a really good high probability trade, because yes, we're below the 1 minute time frame trend and it's trending down on the 1 minute, but the high time frame is up, we're at the level, and we're expanded from the moving average. So this is now we have the touch of the 50 as well. If we get a 10x signal now, this is a very high probability setup. And when that happens, you want to move in to your binary platform, use expiration time 5 minutes, your trade amount based on your risk management, so preferably 1% risk per trade based on your account size. And the good thing about binaries is, compared to regular Forex, you know how much you lose if you lose. I see one of the problems many beginner traders have is that they don't know where to place stop losses. They don't know where to place take profit targets. So usually they end up losing a lot more than they win, and they don't have the patience to really wait for the big trades. Now, when you use expiration time, you're basically in and you're out, and you can use your capital on the next setup. So that's the advantage of using binary options. Now, like I explained in some previous videos, just because we broke the level here doesn't mean this is violated. Now it's just in a zone basically, and we possibly, yeah, like we see here, a 10x signal. I will go in, place a buy order, and we see price is already pushing higher from our entry level. Our entry was down here. Like I said, we're extended from the moving average, and yeah, this is a high probability setup based on my backtesting. So now we just wait for the trade to play out. This is also a supply demand setup. The middle point of this candle is now support, and most likely we will see a bounce here higher. And even if we make a double bottom here and then spike up, that's also an advantage of binary options, because if you were to trade this just based on regular Forex, or if you trade stocks using this strategy, like an obvious area where you place your stop loss is below this low. And when you trade regular Forex or regular stocks, you're stopped out if price move below here. But using binary options, it doesn't matter what price you do. The only thing that matters is how it closed 5 minutes after your entry when you use 5-minute expiration. And we see buyers are stepping in right at the demand level here. And we see the strength of the buyers. I entered as soon as the signal fired. And the reason for that is because I have done my higher time frame analysis. So I was confident in the trend and the level in the higher time frame. And based on that, I entered on the 1 minute time frame as soon as the signal fired. And it gave me a little better entry, but you could have entered on the close, or you could have entered when we came down and tested the demand level of this signal candle. So basically 10x signal, demand level, and the probability is high that we will see a strong push up here. So yeah, you see we're in profit, and this will be a nice 800 plus payout on this trade if it closes in the money. In the money, beautiful trade. And what you can do now is basically, if this high time frame is actually going to produce a low here, we want the price to actually move above the exponential moving average 50. And then we want price to come down and be pretty close to the moving average. Like these, look at 10x here, all these sell signals would have produced nice wins. This buy signal was a nice win. This buy signal should be avoided because it was on the 4th test of this level, and by that time it's used. So if we're actually going to trade reversals, we want high time frame trend level, we want price to be separated from the EMA, and we want it to be the first test of the level, like this signal. These did not have a level, so I didn't trade these, but I traded the sell signals, and I traded this one, like you saw, for a nice profit with 5-minute expiration. So 1, 2, 3, 4, 5. And here's a screenshot of the trade.